how the pricing scheme works. Even in strong bull markets and the precious metals, it's always two steps forward and one step back. You get this rush of speculator money, which is, kind of came rushing in at the end of November, and gold got all the way up. What it closed the month for the first time over 2,000 on spot gold the month of November, and then the next day it rallied another $30.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're at December 18th. Powell has pivoted, so it certainly would appear. Has happiness, peace, and prosperity been restored to the homeland? And what does it mean for you? Our good friend from tfmetalsreport.com, Craig Hemke, is with us. Got a question for Craig or myself? Shoot me an email, kl@kerrylutz.com. Craig, great to have you back. So the moment we were all waiting for, right?
Right. Well, it's been a long year. I've already been thinking about what will I call my macro cast that I write in January as we look ahead. And the initial working title, though not a word has been written yet, is something like "Better Early Than Never" or something. Because this is, I was expecting this type of conversation by about June or July. I didn't think there's, after our experience in late 2018, when the 10-year note got to 3.25 and liquidity dried up and all that jazz. I figured we couldn't make it much past June or July before the Fed was talking about pivoting and everything, regardless of whatever inflation was doing, because they got to keep the plate spinning. I think what I missed was this massive reverse repo thing. And, that the $2.2 trillion or whatever it peaked out at, that was kind of quarantined under the title of excess reserves at the Fed. And that is now drawn down to like 750 billion, and on pace to run out by sometime in the first quarter. And I think that's what I missed, because that allowed the Fed to kind of play along with this higher for longer stuff for about 6 months longer than I thought. And so as we begin 24, I think, again, better early than never, or however you want to phrase that. I think we're finally going to get the end of the argument, where one side people say, oh no, Fed, Powell, credibility, higher for longer. And on the other side, there's people like yours truly, like, he's full of crap.
Yeah.
They've done the same crap for 15 years, ever since they started QE in 2019 or 29. And they'll do it again. And so we're finally going to get that answer, I think, pretty quick.
So funny thing is that at the same time, he had to do it, I think, because the banks are collapsing. And in the end, he serves at the pleasure of the banks, purportedly the pleasure of the president. But really, when the banks lose faith in the head of the Fed, which happens on occasion, like with Volcker, they get rid of him. And and their willing servants among our public servants just go ahead with it.
Right.
So,
that's an important point too, Kerry.
Yeah.
Next year is a presidential election year. And we've been talking about that all year long too, that the Pocahontas and Bernie Sanders and their ilk are going to start piling on if the economy really is weakening in the first quarter, and and unemployment is back over 4%, all that kind of stuff, which is what the Fed themselves is projecting. You're going to get a lot of political pressure for the Fed to start cutting rates too, just if anything, get the stock market to keep going up, and that kind of thing. So you're right. I mean, the independent Fed, that's another leg of the stool for next year.
I once remember reading an article in Barron's, this is 30, 40 years ago, and Alan Abelson said the Fed is doing what it does best, getting a president reelected. And nothing's changed, although I don't know, sometimes things are so far gone that even the Fed, with the magic of the money pump, can't save things for the incumbent. We've seen that a number of times. So question is, all right, so the banks were still borrowing. more banks were getting ready to collapse, obviously. That had to have figured into the calculus. Jamie Dimon said, we don't want any more acquisitions, forced acquisitions. And so what choice did he have, really? And the interesting thing was it looked like gold had kind of hit an intermediate peak. And then the day he issued that statement, man, back over 2000, we ever going to see sub 2000 again?
Well, probably. In the ebb and flow of how the pricing scheme works, even in strong bull markets and the precious metals, it's always two steps forward and one step back. You get this rush of speculator money, which is, kind of came rushing in at the end of November, and gold got all the way up. What it closed the month for the first time over 2000 on spot gold of the month of November. And then the next day it rallied another $30. And we go out at all-time daily high, all-time weekly high, just set an all-time monthly high. Every single derivative, short, futures contract, naked short, is now underwater when the market signed off on December the 1st. Oh, Kerry, look, what? Holy cow. You mean there was a big thing then that when the markets reopened on Sunday the 3rd? No, you don't say. Banks are just buying time, and they wash out those speculators that came rushing in. We saw it on the commitment of treasury report last week. And so they get washed out, and the market kind of resets. And then you take another 2 steps forward, and then they'll get washed out again. One of these times that we will substantially break and hold out of this trading range we've been in for 3 years. And then we'll get another big rush. And that ought to take us up some point in the first half of the year next year to 2,300 or so, I would think. That's where I thought we'd get the back half of this year. So sticking with that theme, being about 6 months too early, I think we'll get there reasonably soon.
Just a matter of time here. And yeah, it's, like you said, they got to keep the plates spinning. And this is the way they do it. But, things have changed around the world greatly since the tightening and all that, since they started ratcheting up rates. China is really on the brink of collapse, if they haven't collapsed already, which you could have an argument about. It's kind of like when the economic cycles guys say, oh, yeah, that's right, we were actually in a recession for the past year. Well, without even some semblance of a free flow of information, it appears that China's collapse is well underway, if it hasn't already happened, and other countries' issues happening.
Yeah.
What is your take on where we're headed here? Because it doesn't look like it's going to be the Chinese century this year, this century, 2000 to 2100, right?
It is, that remember the old saw, I think they used to say about Japan, they sneeze and we get a cold, or however that used to go. That will be a drag, right? That's going to factor in next year. And you could say that could maybe adversely impact commodities in general, but that implies that there's some fundamental driver to all these commodity prices that are derived through the trading of futures contracts. It's like, heck, Kerry, even now crude oil has been completely taken over by those CTA trading funds, where it's like 70% of the daily volume of trading crude oil, which is hands down the biggest commodity market, like $2.2 trillion worth a year. Even that now is done. And so remember, like the whole thing started in the Middle East and back in early October, and crude oil went up from like 80 up to 90, and then boom, just starts sinking like a stone. And everyone's like, well, this doesn't make much sense. So anyway, how that all relating all this back to China and commodity prices, that I guess remains to be seen. But I do think, again, when push comes to shove, if the choice is between, hey, we got to look credible on this inflation fight, or we have to fund the, multi-trillion-dollar deficits. We got to pay the interest on the national debt. We got to take care of any banks that might be failing. That's the way the Fed's going to go. And I think to me, it's almost folly that people sit there and think, oh, no. Powell's going to keep rates at 5.5%.
Yeah.
So the other thing is, getting back to your original question, what happened last week, and did Powell actually pivot and all that stuff? And predictably, this always happens too, Kerry, especially in the last year and a half, when it's all hinged upon this pivot pause stuff. Powell comes out, they have their, what I call the Fed lines, the statement after the FOMC meeting. Then Powell starts flapping his gums, a half hour later in his press conference. And almost every single time, gold goes straight up, because you can kind of read between the lines. That's coming now at the conclusion of what's called a quiet period, where in the week to 10 days leading up to that FOMC meeting, none of those goons, Fed governors, speak. They all go quiet, right? It's wonderful.
Correct.
It's great. Okay, so anyway, as soon as the FOMC is done, you got Thursday, suddenly Friday, man, every goon's looking for a microphone. They want to get on CNBC or Bloomberg or whatever. And usually what they do is if the market, they think, overreacts to what Powell does, they just come out and openly contradict him. And that's what happened last Friday.
Yeah.
Right away, 8 o'clock hour on CNBC, here comes Goon Williams, we didn't even talk about rate cuts. Wait a second, hold on. I can look at the dot plot on your document. You did damn straight you talked about rate cuts, because you're throwing 3 of them for next year is the consensus. So you just lied. But,
that's what they do, though, right? I mean, there's nothing new about that. Right. Imagine politicians and financiers lying. Who would ever think that would happen?
Right, exactly. So what the Fed did then last week is, on the quarter, March, June, September, and December, they put out what's called a summary of economic projections, which is nothing more than like you and me and a handful of your other guests all writing down our guesses, right? I mean, they don't know any more than you and I do. Even Powell himself admits that. But anyway, they write them all down, all 17 of them. In June, at the conclusion of June meeting, they were collectively guessing or projecting 4 rate cuts in 24 and 5 in 25. That's the Fed themselves.
And we'll be back to 0.
Well, getting close. So then in September, you get a little couple upticks, of the manipulated data. And all of a sudden, they're only projecting 2 rate cuts in 24 and 5 in 25. And everyone goes crazy, and the dollar rallies, and all this kind of stuff. Well, now, here we are in December. We're finally right before 24. And they went back up to 3 projected rate cuts and 4 in 2025. So they took one off of 2025 and slid it forward. Why they did that, who knows? But it's, again, they themselves are obviously discussing rate cuts, because they went from projecting 2 to now projecting 3. And that's, whether they do 3, 4, 5, whatever. Again, the Fed themselves is telling you this is what they expect. And so this notion that the Fed is, higher for longer and not going to hike, I'm kind of swimming against the tide on that one.
Yeah. Well, I always had a theory about how they predicted the weather, and I think it's the same thing.
Right.
10 guys around a table, and they say, how many of you think it's going to rain today? And 3 guys raise their hand, you got a 30% chance of rain, right?
Boom.
That's how it's done.
Well, and I use that exact metaphor.
Yeah, that's a metaphor.
Okay, thank you. It's not an idiom or anything like that.
Okay,
so I used that last week in an interview because, and I think it's accurate, because they're essentially predicting chaos, right? You can't just say there's this, this, and this that affect the economy, and it's 3 variables. It's like 3,000 variables.
Yeah.
And when the one moves, it affects the other. I mean, Powell himself has admitted it. And you go back and look at all the transitory crap they were spewing 2 years ago.
Yeah, you remember that? Transitory.
The same summary of economic projections I was talking about in 2021.
Yeah.
We're expecting no rate hikes. And maybe just like 50 basis points of rate hikes by 2023. And what did we get? 500?
Yeah.
So they don't know. They're just guessing.
Yeah.
And it's like the weatherman. The weatherman, tries to put out a forecast. This is your 7-day forecast from AccuWeather, Channel 41. Right. They don't know what's going to happen in 7 days. But if they get it right, they go, well, look at how smart we are.
But they do know the climate's changing, and at the end of the century, we're all cooked, right? That you know, they're very sure of themselves. But try predicting the weather 3 days ahead, that not so much.
Right, exactly. And it's the same thing. Again, weather is a complex, chaotic system too,
Mm-hmm.
right?
Yeah.
And yet, maybe you can predict it 24 hours out to some degree of, with all the models they have now, but it's the same thing.
Yeah.
When the weather guy gets it right, during the newscast, they'll say, "Hey, we've been shown most accurate for 3 years running." When they get it wrong, they'll look at you and go, "Well, it is the
Crickets.
weather."
Crickets,
Okay,
man.
a good
Hey,
gig.
that's just the way it is. So we look at what's coming back to life lately. I'm sure you noticed it. Copper.
Yeah, yeah.
It's heading
Very, and
back to
again,
$4, which is resistance for sure.
yes,
But it's probably going to blow through it in the coming years. Certainly, if gold is going up.
yes. That's something I wrote about last year in the first week of January for this year's forecast, because there were all
Mhm.
these forecasts in January of last year, even from like Goldman Sachs, saying that above ground copper was going to be extinct by maybe August or September. And I'm
Yeah.
thinking, whoa, apparently that hasn't happened yet. However, you're right about price. It's been moving up rather steadily. And if the dollar continues downward next year, as I suspect it will, yeah, you get above $4 and 440, and all of a sudden you're back at the old all-time highs of 480. And then, you kind of get a feeding frenzy on top of that. And that'll help silver. And the other thing I would add for anybody wondering about silver, I felt strongly we'd get there this year. I thought we'd get to 2,300 because I was 6 months ahead of myself, I guess. When we break out above 2,100 in gold and you get about a 10% rally on top of that, and we get to about 2,300 at some point in the first half of next year, will the gold silver ratio be 100 and silver still be at 23? Probably
I don't
not.
think so.
Yeah.
I
So if I'm
think
right
not.
about the 2,300 part, then you can kind of pick your own gold silver ratio and kind of back reverse engineer a price from there.
Yeah, I think, well, look, gold is trading at or near its record high. Silver's trading 50% under,
Yeah.
right?
Mm-hmm.
So which one's going to eventually take off? If you know, it'll start with gold and then it'll go to silver, right? I mean, isn't
Yeah,
that the way it usually works?
yes. I mean, it's again, the idea of, let's say, gold has annualized 9.3% since the beginning of this century. And you always cherry pick dates, it's annualized 40% or whatever since, the March of 2020, you can always,
Yeah.
well, let's just pick one and just say, okay, from the beginning of the century, it's annualized about 9.3% in dollar terms. This year it's up so far 11, something like that. So we're just clipping along. So even if we just do that next year, we're talking, 2,200 and change. And so
Hmm.
at some point, as much as it's been a challenge to get silver above 26, it'll get above 26 and then it'll go above 28. And like as with gold, all of a sudden, when it becomes a clear recognized breakout of this trading range that it's been in for 3 years, then you get this rush of speculator money, and all of a sudden it'll have trading
Yeah.
with a 3 handle. And
Yeah, we have seen it before, right?
yeah, yeah, that's right. And and I just keep spouting all this historical stuff, but this is kind of like how we ended 2010 as well. Now we got 2 weeks to go, but I remember I was only in the second month of running this website. It started in November of 2010, and I
Right.
can go back. It was on a Google blog spot, so all those old posts from 13 years ago are still on
They're
there.
all there.
And at the end, the very last post I wrote in 2010, so I wrote about it was a superfecta, because gold closed. I don't know if it was New Year's Eve or the 30th or whatever, the last trading day of the year. It closed at the daily high, weekly high, quarterly high, and annual high on all four of those charts. And you know what happened in 2011 then from there? I mean, had a pretty decent rally into September. We got a shot at that. The same superfecta. If we can rally over these next couple of weeks. So that would certainly seem to set us up rather positively.
I would like to see this. It would be some vindication, but just that the whole world hasn't totally gone crazy, right?
That's too late for that, Kerry. The
Yeah.
whole world already has. Come on, you know
Yeah. 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 Could not agree with you more.
that.
Hey, so all right. So what's new on TF Metals report?
Well, it's been a great year. The site I think is extremely valuable, and I couldn't to the users of it, I guess is what I'm saying, and not just not for what I do, for the community aspect.
Hmm.
I mean, anybody listening to us, no doubt remembers 2020 and what it is. I mean, that was a crazy year between COVID and the riots and the
Oh
election
yeah.
and oh crap. Oh, I can only imagine what 2024 is going to be like. And so again, I think where a lot of the value of TF Metals Report is just the
Yeah.
community of people where you can kind of interact with
Hmm.
people like you and I sitting there going, "Oh God,
Yeah.
Kerry, yeah, you know that."
Right.
There's a
Absolutely.
there's a whole community of people like Kerry and I
Yeah.
that kind of see each other through. So
Yeah. And
it's going to
that's
be a
what we
volatile
need.
year. I mean, you need independent voices kind of giving you the news and telling you where the markets are headed, so we can do that. But it's
Hmm.
also, I think, a really important time to be connected, maybe not with your physical neighbors across the fence, but with
Yeah.
people around the world that can help you out. That's what my site does.
All right. And we're big fans of it for sure. Link is in the show notes to this interview on financialsurvivalnetwork.com. Question for myself or Craig or anything else, kl@kerrylutz.com. That's the approved email address. And while you're at the site, please sign up for your free newsletter. Craig, always a pleasure. Thanks for stopping by, and we'll touch base with you in a couple months and see how this is all unwinding.
Happy Ramahana Kwanzaa, my friend.
Oh, thanks. I've been celebrating all of them, every
There you
single one I
go.
possibly can. You
Yeah,
never
and
know.
I didn't offend anybody by saying that either. See,
I'm certainly not offended. So
see,
if I'm not offended, you're probably okay.
I'm probably okay. Well, happy Ramahana Kwanzaa, and we'll see you in 24, my friend.